All right, welcome to this explainer. Today, we are meticulously breaking down a strict mechanical trading system designed to do one specific thing: completely remove emotion from your decision-making. I'm genuinely thrilled we're diving into this because we're tackling what's arguably the single greatest enemy of any active market participant: the human mind. You know exactly the feeling I'm talking about, right? Staring at a chart until your eyes literally cross, watching prices tick up and down, and feeling that sudden, overwhelming urge to just click a button and do something. But as we'll see from the source material we're unpacking today, long-term success isn't about feeling it out. It is entirely about following rules. We're going to look at a highly specific, stripped-down blueprint that takes the guesswork completely out of the equation.
So if you've ever struggled with undisciplined trading, I want you to ask yourself right now, do you actually have a rule-based system for knowing exactly when to enter a trade? Honestly. Or are you kind of just staring at the screen, waiting for a gut feeling to hit you? Because so many people operate entirely on instinct. They see a flash of green and they buy. They see a sudden red candle and they panic sell. But what actually makes a truly perfect buy signal? Is it a sudden news event breaking? A hot tip from your cousin? Well, according to the data and the strategy we're analyzing today, a perfect buy signal has absolutely nothing to do with opinions. Zero. It relies entirely on specific, measurable, mathematical realities lining up at the exact same moment.
Okay, let's jump right into Section 1, the strategy blueprint.
Here is the uncompromising formula we are going to unpack today, and it leaves absolutely no room for guesswork. Buy signal, RSI above 60, 9 EMA above 21 EMA, and a bullish candle. Target, previous resistance. That's it. That is the entire universe of this strategy. Notice how there are no asterisks, there are no hidden exceptions here. It doesn't say, do this unless you have a really strong feeling the market is going up anyway. This right here is the ultimate antidote to emotional trading. It's a strict mechanical checklist. And over the next few minutes, we're going to dissect exactly why these specific ingredients are required to bake this cake.
Moving on to Section 2, Anatomy of a Buy Signal. Let's break down the 3 pillars of this strategy.
I want you to think of this whole system like a combination lock. A safe isn't going to open if you only have 2 of the 3 numbers, right? And you need the right numbers in the exact right order. Well, the very first number to isolate is exactly 60. Now, we all know the RSI measures momentum, but this strategy, it doesn't care about the RSI being at 40 or 50 or even 59. It isolates the number 60 as the absolute baseline for entry. Why? Because 60 represents a very specific, undeniable shift in momentum. It's a rigid line in the sand, and honestly, waiting for this exact number requires immense patience.
The very first mandatory condition is that the RSI cannot just be rising, it must be strictly above the 60 level. If that RSI is sitting at 59.9, the strategy says no, you do not have permission to buy. Being above 60 indicates that the buyers aren't just showing up, they are firmly in control of the momentum. This is your first major filter. So if you open up a chart and the RSI is hanging out at 55, you can literally just close the chart and walk away. You've just saved yourself from a potentially weak trade simply by following step 1.
Next up, the number 9. This represents our 9-period exponential moving average. Because it hugs the price action so closely, it acts as our short-term momentum indicator. It reacts super quickly to what's happening right now, in the immediate moment in the market. Basically, it's the fast-moving component of our structural alignment. We then take that and pair it against the next crucial variable in the formula, the number 21. This is our 21-period EMA. Because this calculates over a slightly longer time frame, it inherently smooths out those rapid, chaotic fluctuations of the price. Think of it this way. If the 9 is a speedy little sports car, the 21 is a heavier, much more stable truck. It establishes our short to medium-term baseline trend. And the real magic of this strategy happens in how these 2 specific numbers interact with each other.
And that brings us to our second pillar. The short-term momentum of the 9 EMA absolutely must be positioned above the longer baseline of the 21 EMA. This is your visual representation of trend confirmation. If the fast-moving 9 is riding above the slower-moving 21, it tells us that the immediate short-term momentum is stronger than the historical baseline. The current price action is actively pulling the averages upward. Remember our checklist from a minute ago? We already have the RSI above 60 telling us momentum is strong. Now we have the 9 EMA above the 21 EMA confirming that the structural trend is aligning perfectly with that momentum. We are building a case for a high-probability trade layer by layer. But we still aren't ready to push the button. Because even if the RSI and the EMAs align perfectly, the exact moment of execution relies on this third and final pillar, a confirmed bullish candle. You could have all the momentum and trend alignment in the world, but if the current price bar is printing a massive red downward candle, you do not buy. The strategy explicitly demands a bullish candle. This is the spark. It's the final, undeniable proof that in this specific moment in time, buyers are stepping up, taking charge, and pushing the price higher to close above where they opened. This right here is your definitive trigger.
By locking in the strict chronological sequence, you are creating a high-probability entry system. You scan for conditions 1 and 2, and you strike only on step 3. So it looks like this. Step 1, check the RSI. Is it above 60? Yes, proceed. Step 2, check the EMAs. Is the 9 above the 21? Yes, proceed. Step 3, check the current candle. Is it bullish? Yes, execute. If the answer to literally any of those is no, you reset and you wait. Doing this completely removes that nasty anxiety of wondering, should I buy now? The system tells you exactly when now is.
All right, let's pivot to section 3, hitting the target. It is time to talk about the exit strategy.
Getting into a trade is really only half the battle, and honestly, it's usually the easier half. Knowing exactly when to get out is what truly separates the professionals from the amateurs. You might have executed the perfect buy signal, but without a predetermined exit, I guarantee you emotion will creep right back into your trade. Ask yourself this: have you ever been in a winning trade, watched the numbers go up, mentally spent those profits, and then held onto it way too long until it completely reversed into a heartbreaking loss? Yeah, we've all been there. It happens because of greed. If you enter the market without knowing exactly where you plan to exit, you are flying blind. You have to have a destination before you start the car.
So, according to our source material, the target is singular and precise. You look strictly to the previous resistance level to close the trade. Now, what does that actually mean in practice? It means looking left on your chart to find the price level where the asset previously struggled to break through, the spot where sellers historically stepped in and pushed the price back down. You aren't randomly guessing how high it might go. You certainly aren't just hoping for the moon. You are looking at cold, hard historical data and saying, okay, this price level was a ceiling in the past, so it is highly likely to act as a ceiling again. Therefore, that is exactly where I'm going to take my profits and exit the trade. It is a completely logical, entirely emotionless target.
Okay, section 4, final strategy review. Let's pull this all together.
Lock this checklist into your memory because here is the entire explainer summarized into 4 absolute, uncompromising parameters that you must verify before ever risking your capital. 1. RSI above 60. 2. 9 EMA above 21 EMA. 3. A bullish candle. That whole sequence is what gets you in. And 4. Target is previous resistance. That is what gets you out. If you follow this to the letter, you're no longer trading based on what you ate for breakfast or what some random talking head on TV said. You are trading a mechanical system derived directly from mathematical indicators and historical price action.
So the formula is laid out perfectly for you. But the real question I want to leave you with is this: do you actually have the patience to sit on your hands until every single condition on this checklist is met? The strategy itself is incredibly simple. It's the execution that's hard, because human nature always wants to cheat the rules. You're going to see the RSI at 58 and think, close enough. You'll spot a slightly bearish candle but think, well, the EMAs look great, I'll just jump in a bit early. But the moment you do that, you break the machine entirely. So as we wrap up this explainer, I challenge you with this. The next time you open up a chart, will you be a slave to your impulses, or do you finally have the unyielding discipline to truly follow the rules?